So today's topic is going to be a little bit on the sadder side of things. You guys know I usually like to keep these trading blogs upbeat and inspirational and motivational, and I have no doubt that today's blog episode will be the same. But it deals with a topic that is a little bit depressing and a little bit sad. Unfortunately, it's also the reality of trading. And I think I had a lot of topics I want to talk about on my list. I've been getting a lot of questions, which shows how much you guys have been supportive, how many of you guys have been active in leading comments. So I'm kind of, behind the ball here, but I want to jump today's topic up to the front of the line because it's actually happening today. I'm actually still conversing with this trader as I speak. And today is the perfect day to talk about it because we had a lot of big moves in the market today. We had a rate increase from the Bank of Canada, and we had Janet Yellen testifying this morning as well. And the topic is just, it's really setting up your trade, the importance of having a strategy, and the importance of managing your risk. And I want to start off by sharing with you a quote that I posted on social media the other day. I posted it on Instagram and Facebook, I think last night, LinkedIn and Twitter a few days before. But the quote says, "Risk management is the toughest thing for new traders to learn. Most people don't realize how much risk they're actually taking until it's too late. They don't cut losers quickly, and they will sell winners too soon. The exact opposite of what they should do. Let your winners run, scale out, and cut your losers immediately." And this is the most important part. So if you remember nothing more from this trading blog, remember this. It's okay to be wrong. It's not okay to stay wrong. And that is exactly what the trader that I'm talking to right now is doing. And I want to take you through some of the conversation that we've had. And, this is probably going to hit home for some of you. And, again, my intentions here aren't to make fun of the trader. My intentions are not to embarrass the trader. That's why I'm not showing you their name or anything like that. My intentions are just to provide a real life example of what is actually happening out here. What is the reality of trading. We don't want to live in this world where we think everyone's doing great and it's all unicorns and rainbows. The reality is traders are struggling. Traders are blowing accounts. Traders are losing a lot of money left and right. And that's happening more often than you think. The majority of traders are going through these struggles. And our whole aim here at Trade Empowered, my whole aim as an educator is to really help pull traders out of that. I know I'm not going to be able to do it for everyone, but if this video can touch one person, then I consider that a win. But the trader said, "Hey, Akil, big follower of yours. I watch your YouTube videos, and I need some advice from you." And I said, "Sure. What's your question?" You guys know I'm pretty responsive on social media. And by pretty responsive, meaning I always respond. He says, "Akil, Eurodollar sell orders at a certain place. He said, what I did was compulsive trading." That's one red flag, right? Compulsive trading when Draghi did the mischief. This was talking about last week when Draghi had a speech or 2 weeks ago. But I did some compulsive trading when Draghi did the mischief. It was my mistake, right? It was my mistake to be in the trade. And the question is, should I hold on to it or should I let it go? Will the euro fall back to these levels? Thank you so much. Then he says, "I did the same thing with euro yen." So what the trader did was they took two impulsive trades for no rhyme or reason. They have realized that it was a mistake, and they're asking my advice on whether they should stay or hold. Now, if you guys have worked with me or if you've asked me this question in advance, or in the past, you already know my answer. My theory is if you ever find yourself in a trade that you're not supposed to be in, that's either a trade where you move stop losses back for some reason or a trade where you entered emotionally and it didn't meet something in your plan, what should you do? Right? Type it below here. Whether you're on Facebook, whether you're on YouTube, type it below. What should you do if you ever find yourself in a trade that you're not supposed to be in? You should exit immediately. Exit immediately, because whether you stay in or it's already a bad trade. And we never want to be involved in bad trades, thinking long term. Remember, there's 4 different types of trades. There are profitable trades, there are unprofitable trades. There are good trades and bad trades. We don't care about this side. We care about good trades and bad trades because we know that over time, good trades will bring us positive results. Bad trades will give us negative results. So that was my exact answer to the trader. I said, hey, in my opinion, whenever you find yourself in a trade that you shouldn't be in, exiting immediately is the best action to take, right? And again, this trader knows he's in a trade he shouldn't be in, and he's looking for me to confirm whatever he wants to hear. So if this trader wants the euro to go up, he wants me to say, oh, well, I looked at the chart and I think the euro is going to go up. That way it gives him that confidence to stay in a bad trade. And that's we hear what we want to hear. It's funny how the brain works, right? I've got a sign in back of me that says, the moment when you realize you're in an argument but you keep insisting you're right just for fun, right? We tend to ignore anything that doesn't support what we already think, and we tend to overvalue anything that we hear that does support what we think. And this trader's looking for confirmation, looking for an excuse to stay in a trade that they shouldn't be in. Trader responded, yes, I realize that, but everyone was saying that it will come down. Who is everyone? Another mistake, listening to pundits on TV. They don't know what they're talking about. Trust me, they have no idea what they're talking about. They're just there for entertainment, listening to pundits on TV, listening to Trader Z in the trading forum. He doesn't know what he's talking about either. That's why he's hanging in the trading forum all day, right? Why are we listening to other people, right? Are these other people trading our account, right? Are these other people using their money? No, right? So why do we care? We should only trade our own ideas. We should stick to our trading plan and only trade our trading plan, right? Maybe we watch other things, or we have a select few people that we value their opinion, but we don't shift our behavior because of that. A great example here on TradingView, I had a friend of mine, former client. Haven't spoken to him in a while, and he commented on a post that I shared, and he said, hey, Akil, first of all, he said, hey guys, I'm a former student of Akil's. I value you. I appreciate everything you've done with me, but my view on this pair is different. And I said, man, that's the best thing I heard all day. Because this trader is not blindly switching his idea just because I don't agree with it. He's making up his own mind. He's developing his own strategy, his own thought process of what he needs to see and what he needs to do. And just because I'm thinking the exact opposite doesn't mean that it's a bad trade for him, right? So we never want to blindly follow others or take others' opinions into account. The only thing that matters is what the chart is telling you, right? The market gives you a story. The market provides you with all the information you need. Use that and only that. So he says, I realize everyone was saying that will come down. So in hope, right? So in hope, right? I'm hoping, I'm praying, right? This is never a good position we want to be in. I hope that I was holding it. So in hope that I was holding it for a very long time, but I learned a lesson of trading that too. I'm not sure what that part means. It says, please guide me on what to do now according to my analysis. Should I close each of the euro yen and euro dollar trades? Or should I hold it until it comes, or will it come back and then close it for a smaller loss? And I said the same thing. If you think you should close the trade, it's obvious you're holding a position that wasn't based on any clearly thought out plans or ideas. I think you should exit the trade immediately. He says, but Akil, if I close, I will lose $500. I don't want to lose that, right? I will close it if it comes closer to minimizing my damage. I've already closed 2 trades. And what the trader is, this is the level of no return right now. This is where you're done as a trader, right? I think about it like a quicksand analogy. I'm not sure if this is true or not, but they always say that if you happen to fall in quicksand, the more you struggle and the more you fight, the deeper you go down. This is the trader in a downward spiral. He's digging himself his own ditch, and it's only a matter of time before he dies. And by dying, I mean, lose more than you're supposed to or blow your account in the market. Because the trader is now in a position where they know they're wrong. They know they should be out of the trade. But they're holding on, they're praying, they're hoping that it will come back so they can just take a smaller loss. And this is why traders fail. For you guys that are new to this video or new to my channel, on I think somewhere on the homepage. It may be the featured video. There's a video I did called "Statistics on Why Most Traders Fail," and it was an interesting study done where they found out that most traders don't have a problem finding winning trades. Right? They win more than 50% of the time. So by thinking about that number, then what's the problem? The problem is that when they lose so much more than what they make when they win. And this is a perfect example of a trader that's hoping the market's going to come up and pushing that stop loss back if there's even a stop loss. And I'll tell you what, by the time this trader gets stopped out, they're going to lose 3, 4, 5 times what they should have. And that goes back to the quote, right? Keep your losers short. Know where you're wrong, right? Once the market tells you you're wrong, get out. Take a very minimal loss, right? I took a trade on the dollar yen this morning, right? Got stopped out right away. Only a small loss, so it doesn't bother me, right? Because I put my stop loss where I knew I was wrong at, instead of holding it and hoping and praying, and on the backside taking a much bigger loss that may have ruined my results for the entire year. So anyway, and my response to this was, again, the trader said, I'm hoping that it will come back up so I can take a smaller loss. And I can say, I said, hey, well, if it doesn't come back up, you may lose a lot more. Just trying to piggyback on the idea of, hey, buddy, you should probably exit your trade right now. And then I said, I'm sorry I couldn't provide you with the answer that you wanted, which is the trader wanted me to tell him what to do in the trade. And blah, blah. I says, well, I'm taking a risk if there's a chance of a correction in a few days or a few weeks. And it's no point from here. There's no point in continuing the conversation from here. We went on for a little bit more about, he was telling me about a strategy and MACD divergence and RSI and pin bars and Ichimoku and all this other stuff. But it's sad to see this. It's sad. And unfortunately, as an educator, I'm becoming more and more numb. The more popular I get, the more of these I get on a daily basis. And I'm becoming more numb to it and numb to the fact that there's always going to be this type of gambler out there. There's always going to be this type of reckless trader out here. And that there's no way I'm going to be able to stop all of that. Not that I'm trying to. I'm not trying to be a superhero here. But what I can do is just try to establish a community of people that think the same. And as a community, we can try to help the others in our community. And again, if you're someone out there that's been through this, if you're saying, hey, Akil, that's me, I do the same thing, or maybe you're in a trade right now, you thought the dollar was going to react a certain way and it didn't, or you're late to the Canadian dump off this morning, or trying to get revenge trade because you missed the initial move. Think about that quote I read to you earlier, right? It's much better to take a small loss, reload, and find the next good trading opportunity than be stuck in a bad trade and lose a lot more than you're supposed to. That's how you blow accounts. If you're trading like a professional trader, if you're trading like a good, knowledgeable trader, there should be zero chance of you blowing an account, meaning your losses should be that small. I did the math last year. We did a live blog. I have to take 200 straight losses in a row, 200 straight average losses in a row to blow my account. And I always say by the time I hit 199, I'll probably just retire from trading because I know I stink. But hopefully this wasn't a downer of a blog. I did push back a discussion on how I'd rather be a 70% trader versus a 90% trader. That's going to be a very interesting blog. I pushed back one that I was supposed to talk about since Monday about being stuck and talking about the 4 levels, the 4 stages that traders go through. I even had another one here about, I don't know what it is, about taking your time to develop as a trader, kind of the downfall of rushing into trading and developing bad habits. But again, on this type of day, because it's happening live, because it's in the moment, I want to bring it to you. And because, again, we have a very busy news release day today. And I know there are some people watching this video that may be going through the same thing. So hopefully it helps. I promise my morale will be up. I also had another canceled podcast interview. This is the 3rd time. Some technical difficulties. So that's kind of got me down as well. But hopefully this impacts you, and let me know. Leave a comment. Again, if you're watching on Facebook, leave a comment underneath this post. If you're watching on YouTube, leave a comment. It's even worth it saying, hey guys, I've been here before. I've done this as well. You wouldn't imagine the type of boost to morale that traders get from hearing that other traders are doing the same thing. They hear from me all the time saying, hey, I used to do this, or you shouldn't do that. And I'm like, this guy doesn't know what it's like to be a struggling trader, even though I do. It's great to hear from you guys when you say, hey guys, did this last week and I paid the price from it. And if you can affect one trader that way, or if you can affect one trader by sharing this video and spreading the word, then we're continuing to do our job and grow this community. So until next time, plan your trade, trade your plan. I'll see you guys next time. All right, traders, so I hope you enjoyed today's video, and if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our tradeempowered.com website, or also take a look and you'll see more videos available for you. Have a good one.